Good afternoon, traders. It's Bill Baruch with Blue Line Futures, and it's your midday market minute. We got a jam-packed back half of the week getting going today. Started off with ADP payrolls, 204,000 jobs. But that's a bit of a snoozer number there as we look into non-farm payroll Friday. It gives us a glimpse on the job growth, right in line with expectations. But wage growth on Friday is going to be the main number we're looking for. Tomorrow, ISM non-manufacturing and durable goods. We don't want to sleep on that. But everybody knows FOMC today, it's the big one. Really, though, is it that big? They're not expected to hike rates, though June is already priced in, 94%. September's even beginning to be priced in. So what can they do to really change it? We're not getting any quarterly projections from them. The statement's going to come out. There's no press conference. If we're just looking at the statement and what their feeling is on growth and inflation, the numbers really haven't been that great. The city surprise index has retreated from where it was over the past 2 months on that high. The data has been bad. Just because the dollar is rallying doesn't mean the data has been good. The data has been really missing all corners of it. And ultimately, I think this is a spot where you can look to lean on and selling the dollar. Now, you don't want to just, again, we talked about yesterday, you don't want to just back the truck up and sell it. You don't want to just stand there waiting to sell it. But look for what the statement gives you and look what the price action gives you. And you could have a nice high in the dollar to manage risk against it. Trade it above 92.50, but look for this area to hold and to retreat down as giving you a signal that there could be some good downside. We really do believe this dollar has been a big short covering rally. And yet, every rally really does start with the short cover, but as this rally ran its course, one thing we're also looking at is gold. Gold traded down near 1,300, and last Tuesday's the commitment of trader that was released on Friday, last Friday for last Tuesday, showed a reduction in the net long position to the lowest level since that December Fed meeting. That's when that gold market rallied from 1240 to what we've seen, 1370. That December Fed meeting started that, and gold has sold off into Fed meetings regularly. Not to mention, when that commitment of traders was released last Tuesday, the gold has fallen almost 2.5% since then. So we've seen a lot more selling. That commitment of traders coming in on Friday is going to be a lot less. And silver's still in that short position there. So we see some great opportunities in the metals if the dollar starts to sell off from today. Right now we'll touch on the S&P to finish up. The S&P is trading against some support here down at 2643, 2646. That's our first key support. We want to see this hold, remain constructive, get back into 2655, and look for a good close today. That's going to get some momentum going. We need the Fed to not be so hawkish, and if we get what we want for the dollar, we should get a bullish move in the S&P. Give us a call. We're here to talk about all this or anything else on the board. 312-278-0500. Email us info@bluelinefutures.com. Remember that futures trading involves substantial risk of loss and is not suitable for all investors. Thank you.